Hey traders, Nick Shaheen. Let's look at Regeneron. I don't remember doing a video on this one before, so this will be a new one. Let's see if we can talk through it. So clearly it's in the news of late. President Trump used some of its stuff to get better, and the trading is pretty wild in it. So recently it has had a decent little rally. This is a daily. It should be about 1 year's. It is 1 year's worth of data, and it does. There's not a lot to be said from this except to say that it's consolidating in a wide zone. Usually these are bases for more upside. So even though technically if it loses 540, then it can come down to 475-ish, 480 before you have a conniption. I'm not saying that's what's going to happen. I'm just saying for the bears to win, they need to break through that line. In fact, I'll put a line here right now. And it's not usually that fine of a hard line, but it if I were to put a line, this is where I'd put it. There are a couple candles in there that just draw my attention to it. And then if this is lost, then I'm going to start with the bad stuff first, get it out of the way, and then we'll look at the upside potential. If I were to put another line, it would be somewhere here. It's a zone more so than a line, but technically it should be lower because it looks like a head and shoulders, inverse cup and handles, whatever. It has more downside, but I think the buyers will step in here because they loved it here. They're going to even love it more here. If there were resistance area, it would be up here. Let's see here if I can eyeball a place that looks pretty attractive for resistance. I usually look for a couple of candles that tell me that this is a battle zone. I'm going to put one close to several of them. Clearly, if they breach this one, they'll try to breach this one, and if they do, then they'll blow through this one, in my opinion. All right, so we looked at the downside scenario. It just broke out of the volume profile value area, so it had a lot of consolidation down here, and they finally broke out of it, and they need time to consolidate above it to move the value area higher. So when it comes down to the value area, it should be support. So it will take a lot of hard work for them to break through here. All right, having said that, let's zoom out because this doesn't tell me how high it can go, so I need more information. All right, so this is a weekly chart, 5 years. You can see that it had a hideous time here at 40%, almost 50%, a long time to come back all the way to here, and then not much effort to get above here. Where is here? April. So COVID was certainly good business for them. And now they're coming back towards the area where they struggled. They struggled here, right? And now they're coming back towards it. Usually it should be footing. So if I'm shorting it going into this zone, I'm making a mistake. There should be support here. There will be buyers here. There would be buyers here on the way down. However, it is normal to come back down and test it. But now you can see how the inverse cup and handle can happen. So these are the same two lines that just drew. That's not my scenario. This if it falls into here, I'd be a buyer, even though it's a trigger to get to here if it's lost. But that's not my scenario. Okay, so this is the weekly chart. So this tells us, confirms that my inclination would be more upside than downside, maybe stall to build some to move that value area we talked about. And then I'm going to move out to a monthly chart. All right, so this is a long time. So it goes back to like 10 years. I'm going to zoom in a little bit. So maybe it's right here, right now. So maybe it's going to do this, fall another 25%, which is fine. That's in the big picture, people. That's a monthly chart. So not like today, tomorrow, next week. So maybe it is already starting it. So maybe if it falls to here, like I said, there'll be buyers, right? It'll be normal. And even if it does, I think it has another leg higher. So the bulls wanted to see consolidate here. Oh, come on, go away. Consolidate here, build a base from which they can push off and break through this. And if they do, they'll probably have another leg like this coming above here. So I would not short this anywhere above these levels because it's probably going to break into the 700s. So I'm not going to go out and buy a 700 call right now. If I own shares, I'll stay in them. If I'm looking to own shares, I'll nibble. We're going into a pretty wild area as far as elections, etc. but the bulls are definitely in charge. So let's see if we can get smarter. What is going on here with the shorter term candles? So this is a 2-hour chart. Check out this funny candle right here. Can't even see it. So pay attention to this zone then, 591 to 619. Well, I can understand why the 619 is important. Buyers into 590. So if it falls to 590, 585, I don't get out. That's where people should buy it for a swing trade. If it breaks above here, I would buy it on a breakout, some sort of an inverse head and shoulder, so bullish pattern. So if it breaks through 620, it's going to test 640 and higher. It'll probably close this little guy right here, gap, and test these two failures back there. And on a dip to here, it's more of a buy than sell. So if I were a trader, I would be saying buy the dip here. And here would be chase the rip. So these are the tighter levels, and if I want to start to buy the dip towards 590, I could. I like this candle here, this one right there. I don't know if you see it. It's pretty. Look at it. I mean, they opened here, they loved it, they hated it, then they came back and closed it exactly where it was, all in 2 hours. So that sets the tone forward for this zone, in my opinion. And if I look left, check it out. It matches this and that, so it's not a coincidence. They love this zone. Look, holy cow. So it's an important area. This one candle right here. Okay, folks, this is probably, as far as fundamentals, let's see. This is a tool from Benzinga, and it's timing out. Failure, Benzinga. No, it's a pretty good tool. It's probably my PC. Anyway, the key data here will probably show us the price to sales, PE. I just looked at it earlier. The PE is fine. Here we go. Where is it on this page? Anyway, low PE, 24. Forward PE is even lower, like 16. Oh, there it is. 16. Price to sales is 8. So there's not a lot of hope priced into the sales. So the owners of the stock don't expect. This is 8 years worth of sales priced into today's stock price. So it's not outrageous, right? And the PE perspective, this is for a stable company. It's a good metric to look at. 24 is cheaper than the tech companies. Slightly more expensive than Apple used to be. Now it's in the 30s or high 20s. I can't remember. So it's definitely not bloated. So there's no risk from the fundamentals is what I'm saying. So the chart should tell the story. And it's more bullish than bearish, that's for sure. You have short-term opportunities here and there. This was Regeneron.